Hi and welcome to the Market Alert for Monday, the 12th of December 2022. So stock, bonds and black gold battered in ugly week ahead of Fed. Stocks fall in wake of hotter than expected PPI ahead of key risk week. There's lots of news this week, which we'll get into in just a moment. Core producer prices surged in November. Food and brokerage costs spiked. So we have a plethora of economic news this week. We start off today with the UK GDP numbers. They're out at 7 a.m. We then move on to Tuesday. We've got Bank of England governor speaking. We've also got the CPI for the US at 1:30. On Wednesday, FOMC and interest rate rise. Forecast from 4.5 to 4 to 4.5. Which is interesting because that looks like some sort of pivot. That would be positive for the market if they came out at 4.5 and not 4. That's certain because they've been going up at 3/4 or 75 basis points. So an interesting number, this one. I've got the press conference after to justify taking a less aggressive stance there. And on Thursday we come to the UK, where we're expected to see rates rise by 0.5% from 3 to 3.5 as well. And then Thursday, we've got on Friday anything. There's loads on Thursday. Friday, we've got all of the flash news to end the week. So a lot of news this week. Last major week before the festivities kick off, of course, as well. Gold-silver ratio, that continues to move to the downside there as well. Which is good. That means that silver's holding well. Okay, so let's move on and have a look at the markets. We'll kick off with the Dow and its reaction to the PPI from Friday. So on Friday, we see the Dow coming back to that 78% retracement. Overnight, the market's desperate to get back above this, but we need to look at it in a bit more detail. See the markets in a sideways range. Lack of news last week, but this week we've got plenty. So 30-minute Dow, you can see the market opening on Friday. Well, actually, it's an hour before. That's the PPI numbers. Market managing to rally back to the 20-bar moving average just above the 200 MA, but then reverse back through all of it, including the close, and then move down for the remainder of the session. Market's trying to get back above Friday's low at the moment, which you can see there. So it's going to make an effort to get back towards the DP and the 50 EMA, that's for sure. In the German DAX, this stronger than the Dow on Friday. The market up and coming just off the highs before the closing on the electronic session of Friday night. Overnight, the market is trying to get back above the 5-bar moving average, nowhere near Friday's low for the German DAX, so a lot stronger than the Dow at the moment. If we look at the 30-minute chart, you will see how the market plunged down to the S1 with the PPI numbers, shook all of the stops out and then brought the market back a good 89% back to the R2, not quite to the high, and then the market trailing down with the Dow, but not too aggressively. The market gapped up overnight as well, has come back down and tested the support of Friday, where we saw the demand come in there, and now trying to get back above the DP. It's got the 20 bar, the 50 EMA and the 200 MA and Friday's close to get through, but that won't take a lot of doing. If we have the GDP numbers come out positive, they'll soon whistle this back up towards the close. It's not that many points to actually drive through, so I wouldn't be at all surprised if that's what happens. On Friday, in the 5-minute chart, you can see the market's reaction there to the PPI and CPI, not CPI, core PPI numbers. But going back to the morning, the market up in the futures, then down in the cash, sitting on the close of Thursday, and then the market making its way back up and then using the high as support, and the high from Thursday, as you'll see there, 200 MA tying in with this as well before the markets moved up. Then we had the shakeout, and again the market sitting on the high, as I've mentioned before. The low and high, very important areas. The low, particularly today for the Dow, it'll want to get back above this level, and if they can get back above Friday's high, this has to become a support, which you can see here. Despite the fact that it trades below, it's supported with the momentum moving back to the upside, and then prices continue up. Overnight, as we've seen in the 30-minute chart, a bit of a move down in the German DAX, after gapping to the upside, that gap has now been filled. We went above the DP and the market has come back, and as you'll see there, has double bottomed across here. So needs to get back above the DP in order to move higher, but like I say, it's 10 minutes to 7. The GDP numbers are due out in 10 minutes. So yeah, that's Friday. So let's have a look at the results for Friday and the week. So on Friday, started off by having quite a run of losing trades. I think there was 5 on the trot. There you can see there, down 103.54, but by the end of the day, up 90.76. Once I'd found the rhythm, obviously picking the wrong ones. But on the whole, a good week, 1487.09, 8.70 in the profit factor, and 70, I'll make it 77.23 win-loss ratio. Like I say, I'm not really bothered about the win-loss ratio or the number of losses. It's about keeping them small and then letting the profits run, and then the equity curve will sort itself out. In the S&P, also in a bit of a sideways range, did make a higher low on Friday, but overnight again you can see the market's back to the 50 MA, or in that, heading towards that direction. In the 30-minute chart, there's the market moving higher in the electronic session, then hit with the PPI numbers, managing to rally back to the high, but this time the high becoming a resistance. And then once we close back below the 200 MA, the market moving down, and now sitting at Friday's low for the S&P. The FTSE is still very strong. Also, we've got some lower highs for the last 5 days, so due for a bit of a bounce. No doubt it may get that from the GDP numbers at 7 a.m, but just below the 200 MA there at the moment. And in the 30-minute chart, choppy session for Friday there, and then the PPI numbers, and then back up and then sideways, not doing a lot, and then trading back down, where the market found some support when it became oversold just below the 7450 level, and now sitting at Friday's close. In the currencies, GBP, JPY sideways, waiting for this interest rate news. Still above the 62% retracement on the upside there at the moment. Good move up on Friday, as you can see from the daily chart. Looking inside the detail, the market trading off the 200 MA, and also a spike down to the low with the PPI numbers, and then moving back up to the R2 where the market stopped, and then traded down, and has then since consolidated, sitting at Friday's close. The pound remains in a sideways range, got a bit of an 89% retracement going on here at the moment, all down to the rate increase on Wednesday evening for the dollar, see whether it's supported. But the pound stuck in a bit of a range at the moment. Again, we moved higher, slammed down to the DP and the 200 MA, and also this BRN here, which was 122, where the market found support there before moving up to the R2, and then finding its way down back down as the dollar moved higher on the prospect of a rate increase of more than 50 basis points, I suspect, following the release of those PPI numbers. In the dollar index, MT4 haven't released the latest one yet. Well, they have. It's the March one, but there's one bar in it, so had to resort to other means. So I'm using TradingView here to show the latest on the US dollar. Very important this week to have this info, so we'll use this for the time being. There you can see on Friday the market finding a bit of support after a retracement, but we're still below that 200 MA and 20 MA. We need to take that out if the dollar is to move higher. That is all dependent upon, of course, the numbers out on Wednesday evening from Powell, and then also his press statement. And finally, in the metals, silver up once more on Friday. We're above the 23 level, only 23.50 is where we got above. But this was slammed down, gap down to the 50 EMA, and also the high of Thursday, which you can see there. So we're trying to get back above the DP at the moment. Needs to take out the 20 at the close and that 23.50 in order to get anywhere near Friday's high. Gold also sideways to lower, below the 200 MA at the moment. We did come back at 89% retracement there, so having a bit of a breather. This is why you're seeing the gold-silver ratio move lower, because silver is showing more strength at the moment than gold. And there you can see the gold reaction to the PPI and core PPI numbers on Friday, and then the market moving higher because of the prospect of more inflation. But over the course of Friday evening and overnight in Asia, the market's been hammered back down to Friday's low, which you can see the market trying to move higher as I record this today. So there we go. There's a quick roundup of where we are, trades from Friday, and the whole of what's to come this week, which is going to be probably the busiest week before Christmas. And next week you can't expect to have too much after a week like we're probably going to see this week. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.